Hi everyone, Digital Logan here, helping you find success in analog life. I started investing after the crash last year, and there were some lessons I learned along the way that I wish I knew initially. And I'd like to share those with you guys. Number one, there's a difference between trading and investing. When I'm on Robinhood and I see, something in the green, I see a stock that's soaring 10, 20%. I want in. And so, being a rookie, I would buy in just to find that I had bought in at the top. The stock would drop over the next week or two, and it would take months for me to make my money back from where I bought in. There's a trick to trading, or let me actually say there's a skill to trading well. Let's be honest. Traders, there's probably about, the top 10% of traders are the ones who make money from trading stocks or trading bonds or just being a trader in general. It takes a lot of skill. I recommend if you guys want to make money quickly through trading that you get training on that you learn how to read a chart, that you really get a strong economics background as well so you understand how markets work. A lot goes into being a good trader. I know we all want to make money quick, but in order to be successful in that, you have to get a really deep background and really dive in order to get skilled in trading. So what I would recommend is don't be like me and lose your initial $1,500 because, you see the ups and you want in, and so you buy in, and then you see some stocks are underperforming that you hold, and so you sell kind of low just to see them rise later. I wasn't making really wise decisions based on the market. I was being impatient and I wanted money quickly. And so I was making bad trades. The better way to go, guys, from my experience, and I have a background in economics, but it is a complex world out there. What I prefer to do is invest. I prefer to find companies that I truly believe in, and then I buy them. And regardless of whether the stock goes up and down, I bought them for a reason, right? I thought through, why I believe that this company will be successful in the future. And so a brief downturn doesn't really affect my thesis as to why I bought that company. So I buy the dips and I ride the highs, and it's worked out way better over the last year. I've had really great returns. I think anyone who's bought and held in the stock market has had great returns over the last year. So, as we see some rising inflation too, we can expect, I think, rising asset prices as long as we don't get a major deflationary shock. It's a good way to go. Just invest. Number two is assess your personal risk profile. I am 29 years old. I'm married. I have a house. I have responsibilities to make sure that I have, enough money saved up, that, enough money in the bank to make things run, to stay afloat. But I'm well off from retirement. I'm a ways away. And with the way that the market and the economy is shifting right now, I see a lot of opportunity to make money. And so I'm very heavily invested. This may not be the case for everyone. Look at your age, look at how much income you have, and really assess, how much money can you put in here. And I would consider putting a fair amount if you are, under the age of 30 and you don't have a massive amount of bills coming in. The reason I say this is because our generation has a difficult time with traditional ways to build wealth. And what I mean by that is, our parents, my father, who is now maybe 60 years old, he had a savings account growing up that would give him something like 6%, 8% interest. And inflation was about 2 or 3%. So he would actually make money just by storing it in a savings account. Today, a savings account gives me 0 to minimal interest, and asset inflation is about 7% annual. And we're starting to see, there was about 5% inflation just last month. So you can basically look at it as, look at your bank account and light 5% of your cash on fire. That's basically what happened last month, is that your purchasing power was reduced by 5%. So we have to be a little bit more clever. And it's also difficult because a conventional way to build wealth would be buy a house. That's not much of an option for most folks. Houses are expensive, and frankly, the housing market and the stock market, really all kind of vehicles for investment and building wealth, are getting riskier for our generation than previous generations had. So we have to be a little bit more clever, guys. So we are going through a transformative time in this economy. So I recommend, if you can, at least just consider the risk of not investing, because a lot of people don't do that. The risk of not investing is that you simply lose money over time as the government prints money through inflation. And do some research, guys, on what that really looks like, because it's you're losing more than you think by just holding onto it in a savings account. So that's a guaranteed loss. And if you're willing to get informed and take some risks, you can really overcome that and start putting your money to work to actually building some wealth and building a future that you're actually hopeful for going forward. The other thing I want to say with risk is be careful of trusting kind of traditional forms of investments at the moment. You can look at some folks like Stanley Druckenmiller, Ray Dalio. These are some of the highest performing hedge fund managers in the world. And they are saying that, bonds are trash. Ray Dalio is famous for saying cash is trash over the last couple of years. And so bonds have historically been a very safe place to put your money. But with the amount of money that the governments are printing across the world, it's looking like that's going to be less and less secure over time as a way to, generate yield and build wealth. I'd also say, be careful of the stock market. It's going to be volatile. Everything's going to be volatile from here. Another great reason to shift to investing, where you find companies you really believe will be here 10 years from now, and to buy and not worry about that volatility and just keep buying the dips and holding through. The last thing I will say is be careful of the sources that you listen to on investing. I have a guilty pleasure of watching MSNBC, and if I listened to what they told me, I would lose so much money, to be honest with you. They will tell you about trades after they have already been executed by the larger players. So they will tell you about how great a stock is after the hedge funds and folks have already inflated it, right? They're going to say, oh my God, the stock is up 25%. What a great buy. It was a great buy 25% ago. And then the hedge funds and everybody jumped in, inflated that stock, and then they're telling you to buy on top of it, which may be a good decision. It's not that they're purposefully misleading you, but they're always going to alert you of things after it's been, after the opportunity has kind of come and gone to an extent. I would recommend checking out, I love Real Vision Finance. If you get a chance, check that out. They're on YouTube. Most of their content is free. Just to really get your financial acumen, business acumen, economics background developed. And they'll talk about things that have yet to come, right? They'll talk about trends. They'll talk about investing in software, which can provide kind of an exponential pattern of growth rather than a linear pattern of growth that many, manufacturing companies offer. That's kind of a long story on network effects. I would definitely recommend getting into that. I think you would have a lot of success investing in software, especially as we see kind of our supply chains and things have difficulties over the the last few months, but it's looking like it's going to be something that follows us into the future. So, and software is fairly safe from that stuff. Obviously, energy costs are something, and they need employees and a lot of the labor costs and things that normal businesses do, but it's at a much reduced rate than someone who's maybe manufacturing something. They're going to have a lot more difficulty making profits in this kind of an economy. So yeah, check it out, guys. Keep looking for resources, and I really recommend that you guys get into investing. It's been a really exciting time in my life to actually feel like I'm building something and being hopeful, because if you guys have looked around and looked at the news, it seems like things aren't necessarily getting better around us. And it's about time we have some agency and take responsibility for building the life that we want ourselves, because it's looking like certainly no one's going to help us out if And that's maybe saying it lightly. It seems like there may be some forces working against kind of the average Joes in this country. So good luck, everybody. Thanks for watching. I will see you next time. Thanks.